Everyone, welcome and thank you for watching this video. In this video, I'll be showing you the beginner's guide to Nigerian stock market and how you can invest in Nigerian stocks or Nigerian shares. So, and we are going to see what Nigerian stocks market or Nigerian share market is all about. My name is Elijah Doremi, and everything you need to know as a beginner about investing in Nigerian shares or investing in Nigerian stock markets will be explained to you in this video. So you might have been wondering what stocks are, what shares are, or you might have known about it, heard about it, and you don't know how to go about buying and selling, about investing in it. So this video will show you what Nigerian stock market is, what shares are, what companies have shares, what you have to know about companies, how you can start investing in stock market with your phone. So stay with me as we go through this explanation. So what are stocks or shares? Stocks or shares represent ownership in a company. So a share or a stock is the part that a person owns in a company. So a company is like a pizza now that is being divided into different parts. So each part that a person is owning is a representation of a joint ownership of that company, and it's a representation of a share. So it's like a company is being divided, it's like a company is being shared amongst different people who co-own the company, who jointly own the company, or who part own the company. So whenever a person buy a share of a company, they become a part owner, they become a co-owner or a joint owner of that company. And as the company grows, as the company make profits, so every owner would benefit from it, and they will be paid dividends from the profits of that company. So that's basically what stock or shares are. So when you buy a stock of a particular company, you become a part owner of that company. And if the company makes profit, you earn from that profit. And the price of that stock may go up, may go down. The price may appreciate, the price may depreciate, depending on the performance of that company. So as a part owner of a company, you will not hope that the company will run down, you will not hope that the company will run into loss. And most time people who own uh, stock or a share of a company, they may also be a customer. So as you are contributing money to the growth of that company, you're also enjoying from the profit of that company. So that's the beauty of having a share or a stock of a company. So let's move ahead. So what is Nigerian stock market? The Nigerian Stock Exchange is now known as Nigerian Exchange Group. So the NSC was the Nigerian Stock Exchange was formerly NSC and is now NGX, Nigerian Exchange Group. So it's a platform where stocks of publicly listed companies are traded in Nigeria. So there are private companies and there are public companies. So public companies are the ones that they solicit investment from the public. So the NGX is now like a marketplace where people can go to buy a share of a company or to sell the share of a company that they have. So it's like a marketplace or like a platform where stocks of publicly listed companies are traded in Nigeria. So in that marketplace or in that platform, investors can buy or sell shares. So investors go to the market to buy or sell their shares. So let's move ahead. So who regulates the stock market? So the Nigerian stock market is regulated by the Securities and Exchange Commission. So the Securities and Exchange Commission of Nigeria regulates the Nigerian stock market. So and the main function of the SEC, the Security and Exchange Commission, is to ensure the market is fair, is transparent, and it protects investors. So they make sure that the companies that are listing their stocks, they are companies that have good standard, and they comply with the regulations of the government. They comply with regulations of the Security and Exchange Commission, and they are fair in selling and buying and listing their shares. So that's what the Security and Exchange Commission has their function. So let's move ahead now. So what are the companies, what type of companies that offer shares? So I previously said that publicly listed companies, not private companies. So private companies do not offer their um shares or stocks for sale, and they do not solicit investment from the public. Only publicly listed companies. So let's move ahead now. So these companies, they may be banks, they may be telecommunication companies, they may be oil and gas, manufacturing, agriculture, and all that. So all those companies that are public companies are being listed in the stock market. So they are the companies that may offer their shares for sale. People can buy, people can sell, people can invest in it, and all that. So, and there are popular companies, there are companies that you may not have heard about before, but it's very important for you to know about a company before you buy into it. It's very important you know what a company is producing, what services the company is offering to the public, what services, who are the customers of the company, who are the owners, who are the CEO, who are the founders, who are the leadership of the company before you buy into that company. So that would inform your decision. So do not buy a share of a company that you don't know anything about it. So that's an advice by the way. So these are some companies that they have their shares for sale. So now, why buy company shares? Why do we buy company shares now? Number one is that if you buy a company share, you earn a dividend. So I said it earlier that uh, if you buy a share or a stock of a company, you became a part owner of that company, and you may earn dividends or benefit from the company's growth through price appreciation. So if you are a part owner of a company, you will hope that the company will perform well. You will hope that the company will make profits. And at the end of the financial year, the company would pay dividends from the profit. They will share the profit amongst every investor, among every shareholder, among every stock owner, or among every part owner of the company. So those are that's what dividends is all about. So the first reason why people buy company shares is to earn dividends from it, from the company's profit. So when the company make profits, they'll pay you your dividends. Number two is that for capital appreciation. Over a long time, a company may appreciate. When company make profit, when they grow, so their ownership also increases. Their ownership also appreciates. So if you buy a company share now, in the next few months, in the next few days, even in the next few hours, in the next few years, the price may appreciate. The price of that stock may increase. So it may increase in percentage like 50%, 2%, 5%, 10%, and all that. So capital appreciation, stocks may increase in price, so that if you have bought a stock at a particular price, the price may increase and you can sell it at that increased price and you make your own personal profit. And the third reason why people buy company shares is to build a long-term wealth and beat inflation. So if you keep your money in the bank, inflation may beat that money and the money will just lose its value. But when you invest in a company stock, the company will be growing, the company will be making profit, the capital will be appreciating, and your money will keep increasing where you keep it or where you invest it, and you will still be a part owner of that company and still be enjoying dividends at the end of every financial year. So these are the reasons why people buy company shares: to earn dividends, for capital appreciation, and to build long-term wealth and beat inflation. So let's move on. So these are the things you have to consider before buying shares. Number one, do your research on the company. As I said earlier, do not buy into a company. Do not buy a company share that you do not know about it. If you have not heard the name of a company before, there is no reason you are buying that the share of that company. If you have heard about a particular company but you do not know what the company is producing, what the company is all about, who are the leadership of the company, who are the owners of the company, what are the products the company is producing, what are the services that the company are offering and all that. So you don't have any reason for buying the stock or the share of that company. So do your research on the company. Look at their performance, the past performance, how they have been doing over the past 20, 10, 5 years and all that. Look at their legal compliance, capital compliance. Maybe they have been penalized before. Maybe the leadership has not been doing well. They have fluctuations and all that. So do not buy into a company you don't know anything about. So do a research on the company before you buy into it. When was the company established? When was the company listed on the stock exchange? Or is the company listed or not? Has the company complied with the Nigerian regulations and all that? What type of company is it? Is it a consumer-based company? Is it a services-based company? Is it a bank? Is it producing? Is it manufacturing? Is it an insurance company and all that? So do your research on the company before you buy into it. So number two is to understand your risk appetite. So you will know how much money you can risk on the stock market. Investment is all about risk. So you cannot risk your money. Don't bother come into uh, stock market. But every investor has their level of risk appetite. So some people may risk uh, millions of naira, some people may risk hundreds of thousands, tens of thousands, and all that. So understand your risk appetite, understand how much money you can comfortably invest in the stock market before you buy shares. And number three is to check company performance as I said earlier, company performance, past earnings, leadership, industry, and all that. So the performance of the company must be researched about. How has the company been performed? How did they make their profit over the past few years and all that? Did they make profit or did they run at loss and all that? So past earnings, how much money has the company been able to make over the past few years? How have they been able to make profit? What's the percentage of the profit they are making? How are they paying their dividends? How much are they paying their investors and all that? So you can also look at the leadership of the company. You know who founded the company. Know when it was founded. Know who are the CEO, who are the MD, who are the major shareholders of that company. Know the leadership of the company, the managing director, the chief executive officer, and all that. Whether they are politicians, whether they are private individuals, whether they are companies, so you know about them so that you make your decisions. And the industry the company is. So you know if a company is a manufacturing industry, if a company is a bank, if a company is an insurance company, they are traveling agency, they are microfinance bank, they are either in oil and gas industry, they are in other sector of economy, you know what industry or maybe they are in telecommunication on that. So that would inform your decision. Do not invest in a company you don't know about, their performance, past earnings, leadership, and the industry they are. So the next one is that know if you are in for long term or short time. So before you buy a share, you have to decide whether you are a short-term investor or a long-term investor. So short-term investor, they are mostly traders. They are those people who trade maybe every day, every two days, every three days, every four days, and all that. So short-term investors, they are mostly traders. So they buy shares, hold it for a short period of time, and sell it when it appreciates. But long-term investors, they buy and they hold for a long time to enjoy dividends and all that. So you have to determine whether you're a short-term investor or a long-term investor. So now, what are the platform or apps you can use to start your investment journey in the Nigerian stock market. So I advise that before you choose an app or a platform you want to use, make sure they are recognized, they are registered, and they are listed by the Nigerian Stock Exchange Group or the Securities and Exchange Commission. So also, before you buy into a company, make sure they are recognized by the Security and Exchange Commission. Make sure they are listed as a public company and recognized by the by the Security and Exchange Commission. And the same thing applies to apps. So any of these apps or any platform you want to use should be owned by a licensed stockbroker or a licensed sub broker. So if you want to know if an app is recognized, if a platform is recognized, you just go to the Security and Exchange Commission website and you search for the company you want to invest in, see if they are listed. You search for the platform you want to use, if they are being registered, and what company, what asset management company, what security company, or what who is a stockbroker that is behind the app and all that. So make sure you find out about the app you want to use to invest or you want to use to be buying and all that. So each of these apps they represent a stockbroker or they represent a sub broker. So they are the one that will conduct your business for you. They represent you in the stock market. They buy shares for you. They allocate it for you. They give you your CS number, CHN, and all that. So it's very important you find out about a platform before you use it. Also, next thing you are going to look at is if are you a long term or a short term investor? So are you planning to buy and hold a share for many years or are you looking for a short term gain? So long-term investors they usually benefit from compound growth and dividends. So if you invest as a long-term investor, you enjoy dividends, and when they pay your dividends, it will be accruing, it will be compounding, and all that. You can use your dividends to buy more shares. They can also allocate for you rights issued shares and all that. So that's a long-term investor. You can just invest in a company and leave it for a long period of time. They will pay your dividends at the end of every financial year and all that. But short-term investors, they are mostly traders, as I said earlier. So short-term traders try to benefit from price fluctuation. So for example, if you are buying a share today and it's currently at a particular price, and as a short-term trader, you find out tomorrow that it has increased or it has appreciated by a particular percentage, maybe by 5%, 10, and so on. You can just sell it and you make your profit immediately. So but you have to be buying or you have to be trading in good faith. So that's what you have to decide on. Are you a short-term investor or a long-term investor? Please, you have to decide that before you go into the Nigerian stock market. So final thoughts on this video is that investing in stock can help you build wealth. It is not a get rich quick scheme. So it's not something that will make you get rich quick. So but it's very it's something that would build wealth. It is not something that will make you get rich quick. So, but it's important to understand the market and be patient about it. You understand the market before you start going into it. You understand the market before you start investing into it. You understand the company. You understand how the company works. You understand how the Nigerian exchange group works. The uh, legal compliance, the regulations of the Security and Exchange Commission, and all that, the platform you want to use and all that. So and also you have to conduct your own research at different stages of your investment journey. You do research about a company, do research about a platform, do research about a stockbroker, about an asset management, about a registrar, about a security company and all that. So and if you are not sure about what you want to do, you can consult a financial advisor. And I have to make a disclaimer that this video is for educational purposes only and does not serve as a financial advice. So if you're investing, you have to know that it comes with a risk, and always invest wisely. Always invest wisely. So let me quickly run through what we have discussed so far. So this video uh is for beginners or those who are want to know about Nigerian stock market maybe for the first time, or they need further explanations what the Nigerian stock market or the Nigerian share market is all about. So um I have explained what shares or what stocks are. That is, it represents a company ownership, a part ownership of a company. When you buy a share, you become a part owner of that company. The share you are holding represents the part ownership of a company. And as the company grows and they make their profit, they pay you dividends, and the price will appreciate uh, on the long run. So we also discussed that the Nigerian Stock Exchange is now known as Nigerian Exchange Group, and is a platform or is a marketplace where people buy and sell their stock, or they buy and sell their shares. So, and it's for publicly listed companies, not private companies. So I also said that the Security and Exchange Commission is the one that regulates the Nigerian stock market, and it's for the purpose of protecting the investors and to make the market to be fair and transparent. Also, I gave an examples of companies that offers their shares for sale, and these are publicly listed companies, and the most popular ones they might be GT Bank, MTN, Dangote Cement, Seplat Nesu, Ico Insurance, all that and all that, like Airtel, the Nigerian Flour Mill, First Bank, Total Energies, and all that. So um, also I also explained why we buy company shares. Number one, to earn dividends, for capital appreciation, and to build long-term wealth, and to beat inflation as well. That's very important. So you have to consider these things before you buy shares. Do your research of the company, find out your risk appetite, check for the company performance, past any leadership, the industry that the company is in, what they offer, the services, who are the customers, who are the owners, CEOs, major shareholders of the company, and that. And also you have to know whether you are in for a long term or in for a short time. So for platform and apps you have to use, you can use these apps, but make sure you do your own research to find out whether an app is being registered or is being recognized by the Security and Exchange Commission, and it is being owned by a, a stockbroker or a stockbroking company that is recognized and listed on the Security and Exchange Commission website. So you have to decide whether you are in for a long term or a short term. Decide whether you are a short term trader or long term investor. And the final thought is that investing in stock helps you to build wealth, and it's not a get rich quick scheme. You have to understand the market and be patient, and make sure you do your research or consult a financial advisor. And this video is for educational purposes only and does not serve as a financial advice. So invest wisely, and know that investing in stock or investing in stock market come with risk. So that will be all. In the next video, I'm going to be showing you apps that you use or that you can use to buy stocks, how you can buy stocks on apps, different apps, and what comes with each app and all that. So in the next video, you see that explanation. I hope you have learned something from this video. Please, if you have uh, questions and all that, my contact will be in the description of the video. You can send a message on WhatsApp to contact and all that. And watch out for the next video about buying stock uh, on the Nigerian stock market. So thank you once again for watching this video. I'm going to see you in the next video. Bye.